Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Is the music working here? Hold on. Let's switch to a new track. Oh, you know what? It's probably... Are you... Yeah, you're hearing it. I'm not hearing it. I mean, I need to... Yes. Yes. Okay. So, guys, it is Friday. Long week. Yesterday. Equities. Oh, so crazy. One thing at a time. So much to talk about. Okay. Gosh. So here's the treasuries. We had a really big move down on those GDP numbers in the overnight session that's been washed out. So it was good that we got out of our trade yesterday because we would have given up all of our gains. Jeez. Okay, but then the S&P 500, look at this trend. Oh my gosh, it was so crazy, guys. Some reports that like long onlys got in were chasing these big techs because the earnings ended up being pretty good. It was just, I have not seen a trend day like that in the equity indexes in a long time. Oh man, everybody was talking about it yesterday, like all the traders talking about trend days. Just a wild day. Okay. Oil's still kind of middling. Okay. Gold and silver, they're at the lower ends of their range. And copper maybe a little bit up overnight. Copper continues to be the one that worries me. So like when we look at this market, one might be tempted to think, oh, you know, does this mean that maybe we're not going to have a recession in the second half of the year, or like things are good? Well, I don't think so. I think that the global growth still looks dubious. Okay, sorry, I'm a little bit slow here. We're getting the numbers now. Oh, you know what? I need to refresh my thing here. But it's not actually moving too much. It's not actually moving too much on these PCE numbers. Come on. U.S. employment costs 1.2% versus 1.1. Oh, okay. They haven't given it to us yet. That's why. Well, that's kind of a bum deal. That might make it so that it's really hard for me to try and take a trade off of this. Man, my allergies are just like crazy this morning. Yep. Okay, so it is higher than expected for spot 2 versus 4.1. PCE month over month in line with expectations. Spot 1 versus spot 1. Core PCE spot 3 versus spot 3. So in line with expectations. Personal income slightly higher than expected. Spot 3 versus spot 2, but spot 3 is not like too bad. All right. I don't know if we're gonna move too much off of this, guys. There was definitely a whipsaw in the S&P, but the treasuries are pretty flat here, to be honest with you. I think that the Bank of Japan stuff overnight and all of that was much bigger than their reaction to PCE. So here again, you know, man, yesterday it was a really tough, like I really stressed over, do I get out or not yesterday? You know, should I try and hold it through PCE and all of that? And I totally made the right choice, man. Because the whole thing was like, oh, I don't know if they're actually going to get too much from it tomorrow. I don't know if you really get too much from it holding it over the weekend. I think that I definitely can see a reason for there to be like really strong flows, and so I went with it, but I didn't see a reason for those strong flows to continue through into today, because I mean, I think a lot of this is like technical action. Like this is the one, I mean, let's talk more about this trend day that we had yesterday, because, you know, sometimes you'll get a number. For instance, you come in and you have non-farms payrolls is one that can do this, right? And there's a really big unexpected change in non-farms payroll, and that results in a trend day in the S&P 500, right? And as soon as that number comes out and you look at it, you can know that it's going to continue buying all day. Like there are situations like that, and that is kind of the more common standard trend day, right? But sometimes you will get these trend days that just make zero sense. Like the GDP data that we got yesterday was not bullish, right? But the equity market ended up chasing it anyways because of Facebook earnings, right? So it was really, the trend was really like a contradiction to what I think many traders would think would happen in the market. It was very unexpected. And that unexpectedness can create really strong trends sometimes, right? Because everybody's like fighting it and stuff like that. Oh, you're right. Today is the last day of the month, isn't it? Last trading day of the month, at least. So we're going to see some huge rebalancing today. Actually, I don't know if that's as big of a flow here, because I think that a lot of that flow probably already came in yesterday. Could be wrong, but so the thing that I saw in the flow reports was that long onlys were coming in. So that means these are discretionary strategies, or well, I shouldn't say they're. Why am I saying these are discretionary strategies? So these are strategies that are only allowed to go long individual stocks, essentially long onlys. So these guys have not participated for a while now. And what we got yesterday was these long only funds coming in and finding out that they were underweight tech and having to chase it. So that's what it looks like from, you know, the people that are able to see the flows. That's what it looks like was driving that flow. But it was very unexpected, wasn't it? Right. And sometimes the unexpectedness of it is what turns it into such a strong trend. Like the strongest, craziest trends I've ever seen were always bizarre. They always happen on day like there was no news. There's no reason for it to be moving that day. Why did it move today and not yesterday? Like those are some of the strongest trend days, right? And yesterday was one of those days. Yeah. Bang makes up like 40% of the NASDAQ. I mean, we had Microsoft, Google, and Meta with really good earnings. Yeah. And I think that it was Meta in particular that was driving it, really. Right. because Microsoft was earlier in the week, right? God, my allergies, I'm telling you, man. And I've been running my fan and everything. I gotta be careful, like rubbing my eyes so much. It's gonna make me pop a blood vessel in my eye. You remember when that happened? That was weird. It confuses people. Yeah, it's yeah, because it would be like, why did the market move today and not yesterday, right? But it's a really great opportunity to talk about the order flow stuff, right? Because all of these other approaches to what causes the market to move can't really explain it, right? It's kind of funny, actually, when you think about it, because it's like, okay, so fundamentals should move the stock market, but then it doesn't move the stock market, or it seems to be confusing the way that it works. So maybe it's the chart patterns are causing it to happen. that there's the chart pattern indicates some sort of fundamental situation going on in the market, and that can predict what's going to happen. And then you look at those and that doesn't work, right? And so you have to go back to like the most basic, premise of the market, right? Which is, well, it's people submitting the orders into the market that causes the market to do whatever it is. So it's the orders that cause things, right? Well, once you start looking into it and you say it's the orders, now you can say, look, there's all these different things that will drive orders, and you can't predict everything based off of just one of those things. So you kind of have to make these judgments about all of these different flows and then combine them together to see whether there's net buying or selling that day. Which is why if you go back and you try and do some sort of analysis on just price alone, you're never going to be able to see what's going on, right? Because you need to be able to see the individual flows to some extent. Yeah, and the Microsoft plus Alphabet market at the bottom of the week for the NASDAQ that came when Meta earnings and huge rally. I mean, you were a little bit too brief there. I mean, that it's not that unexpected that the S&P got dragged along. Sure. It seems to me that order flow drives price in the short terms and the fundamentals in the more higher time frames, weekly and monthly. Well, so the evidence that we have is that the fundamentals, let's say, don't, for the most part, don't get recovered until you come out to a 5-year period, right? So what that means is, if you're going to invest in an individual stock and your play is, I'm going to pick good companies like a Warren Buffett, right? You want to be able to be in that position for at least 5 years, right? Which is kind of crazy to think about. Yeah, Trading Vanity says, wow. Now there are some effects that I don't think are ever recovered. For instance, we allow stock buybacks that increases stock prices. And, which I really don't think that you should be able to buy your own stock using debt. And of course they would say, well, we're not using debt, but then you do have debt, right? So could you make a rule you can't buy back your own stock unless you have zero debt? Then nobody would do it because companies can grow faster with the debt. Okay, but that increases stock prices. And as long as we have that rule that allows us to do stock buybacks, that's going to affect the markets. And so that's something that is going to move the market away from fundamental value and will never be recovered unless they get rid of that, unless they make it illegal or whatever, right? I've never slept well with a position on. The place where I have a problem when I'm keeping a position on is I want to watch it. So if I can't have it open on this screen and do work over here. It's, my work will be compromised to some extent. So I need to have a really good reason to want to swing. Because otherwise I just end up staring at the computer all day. And then the issue is that staring at the computer all day, so, reading the order flow all day is really exhausting. And it seems to it seems to degrade decision making and basically puts you in the position of you want to get out, and so you get out too early. Right? I think that's the difficulty with it. On the other hand, I have no problem, putting on a position in equities and just leaving it for weeks and weeks, and not even thinking about it. Oh, for sure, Kevin. I do not, if I do swing, I do not walk away from the computer without setting some sort of a stop. For sure. And usually it's I got a runner, I've made $50. If it comes all the way back to break even, then I'll get out. Right? Well, there's the thing. If I'd done that yesterday, I would have broke even. I could have held it a little longer. I could have made another $10. Man, it would have been worth it. I don't know. Would have been a lot of time in the market to have just made an extra 10. So I totally read it correctly. Okay, what do you think about footprint charts to gauge order flows? So the footprint chart can be really effective to show you what happened after the fact. Yeah. I think that there can be situations where that matters, but again, what happens is these tools get abused, right? Like, how useful is it actually to know what happened in the order flow like way back? That might not be relevant anymore, right? But what people do is they come in and they create all of these kind of technical analysis situations. So now they've got the numbers and they say, okay, here's a pattern that I see with the numbers, and here's a pattern that I see with the numbers, and then they try and attribute, you know, some sort of predictive value to them that doesn't exist. Well, yeah, okay, so it can show you icebergs, for instance. Is an iceberg having happened in a location in the past useful thing to know? It could be, especially if I have some way of guessing why that iceberg maybe happened, right? But does an iceberg having existed in a location in the past effectively predict what the future order flows will be now when I'm looking at it and I'm trading? No, it does not. Right. And you got to remember the icebergs in particular are more likely to be like hedges and things like that. And so they're actually not going to have as much predictive value. In fact, you know, one of the things that I think really trips traders up, and especially in like these trend days, for instance, is that they'll see the iceberging and absorption down at the highs of, or iceberging against the highs of the day, and they think, oh, okay, it's going to reverse here, and then they try and take it, and then it just keeps going, right? An iceberg could be a good exit for sure. But at that point, you should be looking at the DOM and you wouldn't need the footprint chart anymore, right? Live action, have you compared economic release speed on financial juice versus others? Okay. I have gotten into this a little bit. I've never sat down and been like, okay, I have these all open, which one comes first, and all of that sort of thing. No, but here's what I have found is that when you have this like chart thing up, like financial juice, for instance, right? They are paying somebody else to get that data and display it, right? And so when you see it is when their data provider gets it and sends it out, right? What I have found is that a lot of these guys are all using the same data. Okay. So, but then the other side of it is that the guys like Forex Factory may actually be using the same data, but it doesn't automatically update for you. And when you hit it, Forex Factory itself is like a bottleneck in and of itself, right? So Forex Factory cannot afford to pay for the bandwidth and everything necessary to make this, you know, snappy and give you the number right away. Right. Well, okay, but why would I use the footprint instead of just the DOM? Right? That's what I'm saying. To me, where's the value in the footprint? It's seeing things historically. Does it have predictive value? Not really. But then it's the same thing coming in here with the treasuries, right? Okay, there are certain things that I can get out of seeing an iceberg. Like you said, that can be a good exit. Absolutely. That can be a good exit. That's a good place to get a fill of some sort. That can be useful to you, but it doesn't predict which direction it's going to go very well, right? I prefer it as it is less flickery. Well, okay. There are some things that you can see on the DOM that you can't see on the footprint, but you know, there are useful things to see on the footprint. So I'm not going to say that it's a useless tool or anything like that. I'm just saying you gotta go, but come back. Okay, so when I get this sort of thing, I'm realizing what's going on is the context that I'm using to explain this and the context that you're using to explain this is different. So let's sync our neural networks up here, right? Somebody's asking me about the footprints because I think the question is, should I use them? Should I put them up on my screen? Should I go and pay somebody to use footprints or whatever the deal is, right? It's funny that the people that like invented these, I don't think they're around anymore. Wasn't that there was like Market Delta or something, Delta something. I don't think they're even around anymore. I think they went out of business. Yeah. And so when somebody is watching that stuff, what's happening is they're watching a YouTube video, and the YouTube video is going to say, okay, here's this particular trade that you can see on the footprint chart. Here's this particular trade that you can see on the footprint chart. And so I'm more concerned about that. And so that's why I'm saying what happens is you have a tool that does show you real market information, and there can be some use to that market information. But by and large, what happens is it just becomes another avenue through which people can try and push technical analysis and try and assign predictive value to certain patterns that isn't predictive. So that's the important thing. Yeah, there are some free footprints on NinjaTrader. But I'd also say footprint is an expensive indicator, like resource intensive indicators to put on. You're definitely using more clock cycles. What do you mean by CMBs? Sorry, what does CMB stand for? I'm gonna feel dumb when you tell me what CMB stands for, probably. Okay, anyways. Cash management bill. I don't know a whole lot about that. I don't know how about that. Nah, listen. Even if you're using zero charts, I'm just telling you, the amount of memory and processor cycles and all this and that you use when you're using a footprint is higher than any other kind of chart, right? If you have a slow machine, might want to think about, you might not want to put 5 different footprint charts on your screen. Okay. Okay, so anyways, the whole thing was coming back here. So what I have found is so I actually get two. I can pull up a window like this in Jigsaw Journalytics as well, right? And when I did that, I found that Financial Juice was maybe a little bit ahead of it in terms of like it showing me the numbers and all of that. Okay. But the bigger thing though is that none of these, where it shows me the number, none of these are as fast as the streaming audio. Okay. Because as far as I understand, this guy with the streaming audio is sitting there with like a Bloomberg terminal and reading them off for us from a Bloomberg terminal. Okay. So I don't think that, using Financial Juice versus, let's say, Bazinga. Is that the name of that kind of stock market based one, right? Bazinga. I don't think that you're going to get the economic numbers faster from using between Financial Juice or Bazinga, for instance, right? So when it comes to quality for a news squawk, the thing that kind of ends up being the difference between like a really high value news squawk and, you know, your lower end ones. So because Financial Juice is the cheapest, right? Financial Juice does not understand as well as News Squawk does, for instance, what is relevant and what is not relevant, right? News Squawk, I don't hear something unless it is relevant to me. With Financial Juice, a lot of things that they mention I don't care about, and so my brain kind of like filters it out sometimes, right? But News Squawk is very quiet. News Squawk also tends to give me better, like for instance, if I'm subscribed to their interest rate feed, they tend to give me more information relevant specifically to treasuries, like, you know, stuff about the auction coming up. Financial Juice is starting to do that. They're getting better at it. They're not as good, but, you know, is what it is. I still think that, like the issue is, you want to go for a better News Squawk than Financial Juice. Now you're starting to pay like $200, $300, up to $500 a month. They're not practical for most retail traders. So I think that the price for Financial Juice, $100 a month, is practical. So really, it kind of ends up coming down to that, right? You're using 100 megabytes right now. That actually is not necessarily a good thing. How could it be 100? Oh, Kevin, are you talking about oh my gosh. It's been a long time. Win. That's right. You're talking about Win. Win Stan's mom. So I think what happened, I mean, she was an older lady, right? I don't know, maybe she passed on. That's a possibility, but she did come and tell us that like the Chromebook that she was watching the stream on like died. And so I think what happened was her Chromebook died, and so she just stopped watching YouTube, was what I think happened to her. It kind of sucks, but like, and that's what happens. She wasn't trading or anything, so yeah. I remember her being one of the OG watchers with you, with Kevin and Lucas. Yeah. Well, I think that you guys did. I think Win started watching in 2018, right? Win started watching. No, it wasn't even 2018. It was like 2019, because it was she came in from one of the debates, right? So it would have been fall 2019. So we had already been around for 2 years at that point. It's kind of funny. Uzi is the first person I can remember like coming into chat and talking a lot. Like Uzi was the one that basically made me be like, oh, streaming on YouTube is actually pretty cool, and like nobody on Twitch cares. Right? In all honesty, I have not tried out the web-based Ninja Trader. Yeah, there was Gary too. We parted ways with Gary. Gary got to the point where it was disruptive enough that yeah. No, not Gary Norton. So there was a guy that would come into chat that was largely an options trader, And from as far as I understood, he had done really well from selling options. So in order to sell options, well, not in order to sell options, but in order to sell options and like survive for a long time, you have to have a pretty big wad of cash to trade with, because like, you know, it's like you'll come in and you'll sell an option and make, you know, a few dollars in terms of like the value of it. So like maybe you sell it for $5, make $500 from it, right? And then if something happens and the value of that option goes up big time, you know, you're losing like 10 times that, right? So and he did give us some information about volatility when I was newer that ended up being really useful. But he would also always say contradictory things. And it had gotten to the point where I was really becoming suspicious of him, to be honest with you. And I see this from time to time. Like, we'll come in, I'll say something about the market, like what I think the market is going to do or something. And then somebody, for some reason, will come in and fight me on it really, really hard. And then they end up being wrong. And like my first thought, because I have that conspiratorial thinking, my first thought is, were they intentionally trying to throw me off? You know? Anyways, so where the issue starts to come in is when I'm trying to talk about empirically based market research, right? And somebody wants to fight against that, and it's to the point that it's like disrupting, you know. You can't come in here and every time that we say, okay, here's the research that we have about order flow, and then you have somebody that comes in that just, you know, they're absolutely convinced that this certain type of chart thing is real, even though we have like no evidence to support that, right? Very disruptive. And so eventually we had to get rid of him. And with Ace, it was kind of the same thing. I didn't have to ban Ace, but you know, Ace eventually was, you know, it eventually came down to Ace just was not on board with what we were teaching, because Ace felt like he had some success with a certain chart pattern, which I still think back on and I think is really weird, because no, I did not ban Ace. I did ban Gary though. I'm usually quiet about it too. Like with Gary, it was like, oh, I'm so sick of this. This is just ruining the stream. I got to get rid of this guy. And after the stream, I banned him, and then nobody talked about it. I don't like to make like a big hoopla, because I think that's the way that a lot of people do it, right? I try to be very hands off with the moderation. But if somebody's coming in and is like disrupting the stream and disrupting our trading for, you know, day after day after day, then I had to do something about it, right? But anyways, going back to it. So see, Trading Buddy, you don't understand, because Ace also lives in Utah. But I never got the chance to meet him because COVID and all that nonsense, right? So the thing though was that you know, he lives in Utah, but he's like ex-Mormon, as far as I understood. And the thing that just made no sense to me, and it, you know, it just kind of comes back into this larger thing that we see with trading, is that he was very, very strict about like, well, okay, you don't have any proof that God exists, so he doesn't exist, right? But then I'm like, well, you don't have any proof that technical analysis works, but you trade technical analysis. Like, why were they so, we need empirical evidence on this thing and not on this thing? I don't get it. Right? it seems to me that we are not as logical as we think we are, essentially, right? Like I think the reason that Seth was able to find this information and come to the place that I am, because I had lots of hard times. Like I would think that I had something and it was working, and then it would stop working, and the performance was just so inconsistent, especially at the very beginning. Like in 2017, when it first started the YouTube, that whole summer, I just went like through the whole summer where it was like couldn't get a single winning day. It was so nutso. And before that, we were doing so well. Like I started doing it. I was trading a live account. I was winning every day. I was like up big. And then all of a sudden it was like whatever it was that we were doing, lost every time. Right? So then I have to go back and find out more things about, learn more about the market. And it kind of turned into, well, there's so many people saying so many different things. How do you even try and sort that out, right? And so what I came down to was I'm only going to study more into the things where they're actually giving like some sort of evidence, because I don't have the time to go and backtest every single one of these things myself, right? If they're not willing to backtest it themselves, if they're not having done the work for me a little bit first, then why should I even bother with it? Because whoever that is that's pushing that idea clearly, doesn't know what they're doing, right? They can't backtest it. Why should I trust them? Well, ZN has been to the upside this whole time for sure. This is not a move that I want to participate in, to be honest with you. Although I'm not sure I understand why it's moving to the upside. How big of a move was it? 15K, maybe 20K. God, I don't know, guys. Is the market right now is doing a lot of nonsensical things based on technical flows rather than the fundamentals, and I don't know what it means. Probably, maybe there's some risk parity needs to be long in the S&Ps. But I just saw, like after that news, they broke higher. They broke above, what was it? 04? I was kind of like, okay. Well, I don't know if I can jump on this now. I'm quite surprised that it's gone as far as it has. Anyways, so I was only able to discover this stuff because I was forced to. Because it wasn't the things that I was naturally gravitated to. You know what I mean? Why are we like this? And this was the thing that I was, the point that I was always trying to make, and I don't think that he understood it, man, is that a human, you cannot act without having some degree of faith in the world. Because you might know all of this information, like you might know that there's gravity, okay, but you don't know that maybe all of the sudden the laws of the universe could change the next moment and gravity stops working, or that there could be some sort of weird unique situation where for whatever the thing is that you're doing, gravity doesn't matter, like the wind picks up or something like that, right? We as people just kind of make these, heuristic decisions to just trust what it is that we know and act on what we think we know without having a perfect information. Because the reality is that you can't have perfect information about the world, right? And so we have to have the ability to act without a complete knowledge. And that's what faith is, right? And at some point in your trading, you will have to exercise faith to some extent. So you can go and you can do all of the research and understand everything that you can about the market. You still don't know if that trade is going to work out the way that you want it in that one particular instance. And all you can do is have faith in the research that you've done and in the strategy that you're trying to carry out, and in yourself and your ability to execute it in order to go into the market and do it, right? And the more information you can have before you do it, the better, of course. But at some point, you have to take faith. At some point, you have to do it. You know? And so once you understand that, you really have to admit that we as humans are just not as logical as we think we are. You know? Something's wrong with your DX chart. It fell over. What do you mean by that? It's moving. It seems fine to me. Or are you saying you have one and it didn't work? Or are you saying yours on your machine or you're having a problem? You're digging for worms. Anyways, Ace is, Ace could come back. We're talking about him and he might show up. But ultimately, that just comes back to this thing, which is like, what do we do here that's different in terms of our strategy? Is that we are using information based on empirical research to base our strategy on. And if there's not some sort of empirical evidence to suggest that there's an edge to a certain thing, I'm not interested in it. And people that are not on board with that idea should go away, because they'd be disrupting the stream and not helping. People use faith to describe different things. If you have a logical reason supported by evidence, that faith is better than blindly hoping. Yeah. I'm using faith in the context that faith is you're acting without a perfect knowledge of things, right? Humans, like, I think that the Christian religion and like religions in general are really picking up on an important part of living and existence when they're talking about faith, right? Because outsiders or I shouldn't say outsiders, but people that don't believe in religion, they say, oh, well, this is just a control, yeah, maybe I can't prove it, but you should still do what I tell you to do, sort of a thing, right? Okay, well, what Christianity is doing is just an extreme, it's just extreme acceptance and practice of faith. But the reality is that faith is a necessary factor in acting in the world, because we never have a perfect knowledge of things, right? So to some extent, we always have to use faith to some extent, right? Yeah, people have, well, I think that's really what it comes down to. People have faith in technical analysis because they have faith in the person who taught them that, right? And that's the way that people tend to operate, right? Is that they tend to practice faith in other people. It's mind over matter. If you don't have a mind, it doesn't matter. Well, you even get into some of this quantum realm stuff where some people think that your willpower can actually affect the outcome of stuff. But I think that that's kind of based on shoddy science. So a misunderstanding of the science. It's really the whole discussion though that we're having in our society, right? What I'm trying to tell people is that in our world today, it doesn't really make much sense to have quote faith in people, because anything that especially in markets, anything that becomes popular and well known kind of gets arbitraged out of the market. Like, it doesn't work in a competitive world. So I don't understand why you would want to put your faith in a particular individual rather than putting your faith in the empirical process, right? Because that's what we're doing, is we're putting our faith in the empirical process. I'm new here. Are you saying technicals don't work at all? I'm not saying that technicals couldn't work, but by and large, the technical analysis that you're going to see out there taught by people on YouTube and whatnot does not work at all. Yes. So let me go into a little bit of detail. We were covering this a little bit earlier, but let me explain to you why. Is I can come in and I can look at an individual strategy that's used by professionals. For instance, a common strategy is risk parity, which says that you have 60% of your portfolio in stocks and you have 40% of your portfolio in bonds, and you periodically rebalance that portfolio. So if stocks go up really, really high, and now all of a sudden stocks are worth 70% of your portfolio, you have to sell some of those stocks and buy some treasuries so that you maintain that 60-40 ratio, right? So that rebalancing behavior that will happen regardless of what their opinion of the economy or of individual stocks and things like that, that's a flow that's going to happen in the market no matter what. And that's what I'm referring to as a flow. So I can come through and I can look at all of the different flows that we know exist within the market. So there are CTA funds, that's a flow. There are people that are trading off of the news, that's a flow, right? And I can combine all of those things together to make an estimate of what the flows are going to be for that day and whether we're going to be long or short, right? So because there's so many different things that affect those different flows, it's impossible to go in and look at the price, which is just like the end results of everything after all of this. It's impossible to look at the price and really tell what's going to happen next, right? So this is why you get all of these bizarre contradictions like you had yesterday. It was a crazy trend day, right? A lot of it doesn't make sense, like, because everybody is short. Like, everybody is the sentiment is just terrible right now. Nobody really believes in this economy, right? And yet you get a huge uptrend day. Like, how does that happen, right? Well, it's because of those individual flows. And you do all this technical analysis. Man, I tell you what, if you go in and you do a trade and you set an equal, like, it's just one contract, equal risk reward, okay? And you find something that has a probability after you backtest it over 5 years, and you're able to get a probability higher than 52%, then like, let's start a fund, man. Like, even 52% would be like a really crazy amount of edge for just the analysis of price. And since everybody is just analyzing price, it's just the amount of edge that they're actually able to get is very limited, if there's any edge in what they're doing at all. As opposed to looking at the flows, man, there can be some situations where a flow is out there and it comes and it just pushes and pushes and pushes, and they're like the easiest trades in the world, you know? So that's why technicals don't work. Okay, kind of but then you have to get into, like, what's the definition of technical analysis and technicals, and does this strategy fit in that bucket or not? I'm just ignoring all of that. I'm just saying technical analysis as it is practiced by the retail trading community is absolute bunk. Yes, it doesn't work. It doesn't work. So market's competitive, and it wipes out those statistical inefficiencies very, very easily. I agree with you. Most chart patterns are useless. So is your answer scalping out order flows? So no. So there are some behaviors in the order flow. There are stylized behavior of order flow, and you can use the stylized behaviors of order flow to predict order flows on extremely short time frames. And so that's what a lot of market making type of algorithms are doing to some extent. Although I'd say it has a lot more to do with statistical arbitrage. But I can come in here and analyze the order flow and know that I'm going to make one tick somewhere, right? It's just those strategies, there's high competition for them. Retail trader, discretionary trader is not very competitive on that side. So what I'm doing instead is I'm combining a bunch of different edges together. So along with the key, which is information that we have that predicts order flows. So understanding what the current positioning in the market is, understanding what individual strategies are doing. For instance, our CTA is buying right now, our CTA is selling, what's risk parity doing. Today we have end of month flows, so that's a really key one that we need to pay attention to, right? Could be why we're getting some buying in the treasuries. There might be some that they might need to buy because of the equity gains that they've ended up having at the end of the month here. Okay. So that's the big one. But then on top of that, we're also understanding the order flow, looking at volatility, looking at correlated instruments, and also looking at edges related to our positioning in terms of managing risk. And so you combine all of those 5 things together. So those 4 plus the predictors of order flow, and we're combining those together, and that's how I make my decisions. So I have the most recent video that I put, which is like I don't remember what the name of the video was, but it's basically it goes into those facets of a trading strategy in a little bit more detail to explain why those are the 5 main components that a good strategy should have. But the other side of it is that what I have become an expert on is the order flow. So I can tell you a lot about what you're looking at and some of the pitfalls with it, and like the stylized behaviors that we can prove are actually out there and how you can potentially take advantage of them. Looks like there was a lot of volume that traded at 12. This is kind of an interesting market here in the treasuries to look at, because it's really messy for treasury market, don't you think? This is a pretty decent up move, but like there was a couple of messy pullbacks on it, and there's all this behavior, and like just look at how that's a really noisy chart for the treasuries. Okay, so there was something, I don't know if sorry, I don't know if Kevin is still there, but there was something that I wanted to get into with Kevin. Okay, so let's talk programming for a second. Okay, so let's say that I have a data series of something like maybe my data series is just price. Okay, so last bar it was, let's use a theoretical instrument that's only priced in cents, right? We'll say it's 10 cents now, it was 12 cents last period, it was 15 cents the period before that, it was 14 the period before that. Okay, how do we store that in the computer? Okay, well, the simplest form of storing data is what we call an array, like this. Okay, which is basically a contiguous section of memory that is put aside for you to put the numbers in. And because we know that each one of these numbers takes 16 bits, or however big of a number it is, I think that most of these are 16. Wait, and int is 16-bit, right? Oh, it's a 32-bit. An int is a 32-bit. Shows how much I know about C++, huh? Okay. So what happens is you set aside 32 bits for each one of these numbers. So if I know that my array is going to be like 20 data points long, then I just say 32 times 20, and that's how many bits in memory I have to set aside to store that thing. Okay. Problem. What if I need to store more than 20 things, right? Well, then what you can do is you can come in and you can say, okay, I originally created the array and I only expected there to be 20, but it went up. So now I'm going to go back and I'm going to remake it, and I'm going to make it twice as big, right? So what that means is, as I'm putting things in, it's fast to put things in, but then if I put too many in, there's going to be an operation where I have to go in and find a new place in memory and recreate the array and then move everything into that new place in memory. That takes a little bit of time. So there's a little hiccup in that place where it's increasing the size of the array, right? Okay. Kind of a problem. So what they started to do to deal with this is they started to come up with all sorts of other kinds of data structures. Okay, so one data structure that you get is called a linked list. Is they'll say, I'm going to, instead of trying to get a bunch of contiguous sections of memory, I just say I'm going to make one spot in memory, and I'm going to point to that one spot. And then I can go in and I can look at that spot and I can see where this one is going to point to the next one. And so this spot in memory for the second element may be in a completely separate place. Okay. So, but I know where it is. I know what the address of it is, so I can go immediately to it. The only problem is, well, not the only problem, but okay. So this allows me to increase the size of my data structure, right? Without incurring a huge penalty, right? But I have to read through this list sequentially, right? So if I'm doing an algorithm that is like, do something to every element in this list, then this is fine, right? Because I'm just going to go, okay, here's the first one, here's the second one, here's the third one, and it's fine. Okay. But if I want to do something to just the last element in the list, right? I have to go and read through all of the elements in the list to get to that piece. This is what we call big O. It's big O of n, right? Which means worst case scenario, I have to visit every n being the number of elements in that data structure. Worst case scenario, I have to go through every element in that list. Okay. So then people came up with this really clever way of doing this, which is this. I create this big section of memory here, and I say, when I get a number in and you say it's 14, okay, I do an operation on this. That translates this into, like, say there's 14, but the value is actually the bar at 7 o'clock, for instance, right? Okay. And what I do is I do a hash function on this 7 that turns it into a number. And then based on the number that I get, that goes into this table here. And then, I'll put it in right here. Okay. And what this allows me to do is it allows me to look up the value of the bar at 7 o'clock in constant time. Okay. It's big O of C, right? It's not based on how big it is. This can be as big as it needs to be. I can always go in and find the thing instantly, right? Okay, so what have you done here? You've changed it from big O of N to big O of C. Okay, so the problem with this one is that you have to set aside this huge area of memory for this table that you might not even actually be using. Okay, so what you've done essentially is you've traded processor time for memory, right? This algorithm uses less processor time because it's big O of C, but it uses more memory. So when I see, oh, I have a bunch of these footprint charts up and I only have 100 megabytes of memory being used, that's not very much. That suggests to me that there can be situations where their algorithms aren't going to run very fast because they're prioritizing memory usage rather than algorithmic speed. That makes sense? So a good example of an application where this really comes into play is a virus scanner. What matters more? How much processor time your virus scanner uses or how much memory your virus scanner uses? Well, the big metric that everybody always used was memory, as they would say this virus scanner uses this much memory and this virus scanner uses this much memory. But the whole thing is that if you use a little bit more memory, you can do a faster algorithm and you use less processor cycles. And that's the thing where your virus scanner will really screw you up and use cycles and so forth, right? So the virus scanner that I like to use, NOD32, it's faster than all of the other virus scanners because they don't care about, well, they care about the memory, but they prioritize the processing speed rather than the memory, right? And I think I would say that a trading application is a similar sort of a thing, right? We have a lot of memory on, most machines have 16 gigabytes of memory. I'm actually starting to get to the point where I think maybe you want 32 gigs. Okay, like your system probably has enough memory, so it's okay for your trading application to use 1,000 megabytes of memory, right? And when your application is using like only 100, that's a little fishy to me. NOD32 is a virus scanner that I'd recommend. I'll show you. It's the name of the company is ESET NOD32 antivirus protection. That's the best virus scanner in my opinion. I haven't looked at it in a couple years, but so maybe it's changed, but generally speaking, NOD32 is the best. That was way too deep of a dive, but I'm assuming because I'm not hearing from Kevin that he wasn't there for that. So, okay, do you pair volume profile and market profile with your DOM trading? Not really. So I'm making a video. I don't know if it'll be out this weekend, maybe next weekend, but I'm making a video about the volume profile. Volume profile has some good concepts in it, but their understanding of things is imperfect. So I wouldn't necessarily say I have a volume profile up there, but I do not use the concepts that are typically taught by volume profile traders. And the basic gist of it is that like the point of control doesn't necessarily matter, but the market does have a tendency to get stuck at a certain price because of certain order flow properties. Okay, when they say that the market has a long memory, is it because algos are referencing a raise in price levels they think are relevant to their trading? I don't think I understand the long memory. Okay, yeah, that's a really good question because that's an important concept to understand. Okay, so when I say that the memory has a long the market has a long memory, what I mean is if I see buying right now, I'm likely to see buying in an hour. So my theory, or the theory that I subscribe to, is that the market's long memory is caused by the existence of large meta orders. Okay. So for instance, yesterday we had a really strong day up. I think a lot of people might come out here and be like, well, because we had such a strong day, we're likely to mean revert, etc., etc., etc. But I would guess that both because there was a lot of chasing on that move yesterday, and so it's very unlikely that all of the volume that needed to come out for that all happened yesterday, and that we're at the end of the month, that today is likely to be an update too. So that would be an example of the long memory. We were up yesterday, we end up being up today. And why is that? Because of the existence of large meta orders. People that are executing, they're not able to execute it all today, so they end up executing it tomorrow. Or really in the markets, it's more like if you see it's buying now, you come back in an hour, you're likely to see buying still. And you come back in a couple of hours, you're likely to see buying still, right? And then the other side of that is that, again, there's kind of this like trending mean reverting behavior in the market, right? I think that everybody kind of picks up on that you'll have these periods where it seems like the best thing to do is to move against the trend, like it is right now, because we're kind of coming back a little bit, right? You would have wanted to make money from it coming back to here, right? But then there's other periods where it just moves in one direction and it doesn't stop and it trends, right? Well, the reality of this situation is actually that you'll get a big move and then a post meta order impact, and then the market will just go flat and it will stay here. So from a fundamental perspective of the market, if we moved up and there wasn't actually a change in the fundamentals, then shouldn't it come all the way back? Shouldn't, you know, when that move is done, shouldn't the market makers come back and say, oh, well, okay, but the correct price based on fundamentals is still down here, so we should let it come all the way back down to here. But that's not what happens. Is after the meta order is done, the impact that it has on the price is permanent, and it's going to stay there unless another meta order comes in and pushes it the other way like this, right? So that's what we're talking about when we mean that the market has a long memory. Is both that these flows tend to be persistent over time, and that the impact from these flows on price is permanent. Alexander, welcome back to the stream. I'm glad to have you. Are the meta order people waiting to trigger another child order when price comes back, when liquidity is recovered? So for somebody executing an order like that in the most passive way that you can, the most important thing to them is the liquidity. So yes, they're going to wait until the liquidity has recovered, right? That's why, like, what I will see is like, oh, okay, there's not a very strong bidder offer there, right? And then I'll wait 45 minutes and then you'll see that like the bid and offers are a little bit more even. The way that they are right now is okay. And you can, after you see it tick up and down, you consistently see that, you know, that to me is kind of like the sign that the liquidity is recovered. And then that's when I start to look at it and I'm like, okay, maybe we're going to get another leg. This is like the time to do it. Because the whole idea behind Almgren Chris is that you're it's more efficient to worry about the impact that your trade has on the liquidity, and by minimizing your impact on the liquidity, you execute more efficiently. It was basically the big innovation by Almgren Chris. So all before this was like all this stuff to do with VWAP and all of that ended up being not as efficient as just like you know, setting a schedule for when you're going to execute things so that you split your volume out over time and minimize your impact on the book. Okay. Well, let's see here. So the equity market has been open for about 7 minutes. Man, we had that was a bunch of different things that we covered there in the first hour, but you guys asked a lot of good, interesting questions. I am still saying I think that we'll close today above 4150. If you know, I'm not an equities trader, but if you had to pull my leg, I think that we close above 4150. So let's see how that turns out. So far, the open has been a buy, right? The treasuries are coming back here, so this is confirming why I didn't want to trade it. Is like the trend may continue to be up, but that's a pretty steep pullback that I don't want to deal with. So let's see here. Nick Timoros on Twitter. The ECI component of greatest relevance to the Fed, wages and salaries for private sector workers excluding incentive paid occupations, showed no meaningful deceleration in quarter one. 1.5% quarter over quarter, the highest reading on record. Oh. Okay. Wages and salaries for private industry workers excluding incentive paid compensation changed from previous quarter. So he's saying that if you're concerned about the wage price cycle or spiral, that the data that we just got is not very favorable. You would think that that would be hawkish, but the treasuries moved up. Wow, weight loss brand Jenny Craig is considering a bankruptcy filing if efforts to find a buyer for its assets fail. Jeez. Hey, Khulud, how have you been? Ooh. Okay, so News Squawk just alerted me to some action in natural gas. Natural gas has been kind of quiet lately, and we are coming into, like, you know, the summer and everything, so we don't pay as much attention to gas. But look at this moving gas. They are having very volatile trade over there. Big old spike, and then it came back. I don't know what that's about. Okay, Lucas says 5 minutes. No, it's not 5 minutes, actually. I'm glad you said something. Chicago PMI gets released 3 minutes early, so we're actually should be expecting to see the market move here in a minute. Let's see here. What are they expecting? They're expecting a reading of 43.5. Remember that this is an index where above 50 is bullish and below 50 is bearish. Last reading was 43.8, so they expected just a slight decline. If that number comes out and I see like big buying off of that, then I'm really going to be like, man, because I'm still of the opinion that the most likely scenario is a recession in the second half of the year. Even though we said there was going to be a recession in the first half of this year, it just looks like the economy continues to decelerate like a slow motion train wreck. Okay, here we go. So watch, you're going to see a little move here. You're seeing the liquidity pull, right? Okay, there's the move. So it was to the downside. So the number does not get released to the public for another 3 minutes, but it looks like that number was better than expected. Maybe mildly better than expected, like maybe a 43, maybe a 44. Let's say 44. In fact, we could choose to buy off of that. I don't like the way that the liquidity looks in the micros there. There's somebody holding 3 lots at 346, and then there's this big gap. That's not necessarily what you want to see. You know, if I wanted to sell, I could hit into that, but it looks like we've come back to like a key spot. It probably had a better than expected Chicago PMI. You know, at this point, I think that we should be concerned that this move in the ZN retraces. But they're not, man, they've got a really wide spread and they're not giving you very good prices. So I think I kind of have to sit on it still. I guess over here we can try it. I'll take 2 there. Okay. Mohammed A. L. Arian, nothing in this week's inflation measures would derail a 25 basis point hike by the Fed next week, or indeed possibly another one after that, though the Fed has not signaled the latter. What complicates the policy outlook, however, is conflicting data on the other elements. Ooh, it was even better than, it was 48.6. So that the number was really, really good. It's still a contraction, but the number was much better than we expected. See how that works? I find that one is so hard to remember that, you know, we always forget Chicago PMI gets released. That's like the one data release that's like that. Eyes are watering. Okay, well, it sure feels like it's been hanging out here at 05.5 for quite some time, hasn't it? I'm not really getting too many fills here. Okay. There it goes. I guess I could have done that 1.3465. It's looking a little bit better there. I think I could maybe, if I felt strong about it,
I'm still a little uncertain. I like 347 still seems a little bit, but maybe 6.5. It sure does look like that the flows are turning to the sell side though. I mean, the 5-year in particular has been selling this pretty hard. I'll kind of get in this mode where it's, so if I'm trying to market make to the short side, you know, it's like, well, I could add some contracts at 04 now, but then all I'm doing is just like taking it one tick at a time with one contract. That doesn't make any sense. So then I'm like, I would like to have one more, but no. Yeah. Which, the 8.1 version of NinjaTrader? That's interesting. What bugs have you been experiencing? Yeah, the newest one. I mean, I tried it and I had, you know, it didn't work with my setup, so it's like, I'm kind of frustrated with NinjaTrader. Yeah, I don't know what to say. I don't think that they're interested in the same things that I am. Put it that way. On my chart right now, the past price is correct, but the recent 5 minutes has dropped like 1,000 points, so it's not usable. Okay. That is weird. That kind of sounds more like a problem with your data provider than it does Ninja, though. I don't know. That's really weird. It thinks that the current price is 34.16. What? Oh wait, are you on June contract? No, of course. Even if you were not on June contract, that number would be crazy. But just that. Yeah, you're on June contract. Dude, there's their data. I would contact their support for sure. That's a weird error. Oh, that's really weird. What the fuck? It's like giving you prices from like a year ago. Like 34 sounds really familiar to me, right? 3,400 was like the price that everybody was predicting was going to be the bottom, or not the bottom, but that was like the downside price target that all of the analysts were having when things were really bearish. Wish I could. Oh yeah, well you can post them in Discord. Good luck getting NinjaTrader 8 support. Oh, you'll get it. You'll get it before the end of the. Yeah, it won't help you for trading right now. I don't know if there's really. Well, in ES there could be, right? Because you'd want to be along ES right now. I don't know.
And when the time bar is done, the price moves back up and the current bar is just really low. Oh, wait. So you're saying the historical bars all look correct, but the current bar doesn't, is always 3,400. That's even more bizarre. And even after you reset the data and stuff, that's really bizarre. Okay, so one thing I can think of is go to Tools, Database Management, and like do your update instruments, like update all of these things in here. Do all of these things within this database section. Because maybe your, I don't know, maybe your instrument settings are screwed up or something. That's so weird. I guess it would be really interesting to see if the previous version of NinjaTrader didn't have that problem, though. Do you remember Brexit and how that one down candle made the others look very small range? That's how the recent bars look on this chart. That is hilarious. Yeah, there you go. If put in a buy order at 3,400 and see if it fills you. I'm just gonna uninstall and wait a bit for them to fix the version. Dude, that's crazy. That's so crazy. Yeah, I don't know what to say about NinjaTrader. I've been seeing a lot of stuff from them that's disappointing, but I'm sure that eventually they'll get past their hiccups, right? Oh, we do have some news at the top of the hour, don't we? Okay, so we're going to get University Michigan numbers. So you get sentiment, expectations, conditions, and the 5 and 1 year inflation, which is particularly important to us, especially since Chairman Powell mentioned it a couple of surveys back. So 1 year we're looking for 4.6%, and 5 year we're looking for 2.9%. So I haven't shaved in a while. I kind of like that, like on my chin, that there's a little bit of gray. I think it looks distinguished, but I just don't think I can handle a beard because I just want to touch it. I think that ADHD and beard just don't work together. Oil and comb it? Well, I could oil and I probably should oil and comb it so that like it doesn't, it's not so you can kind of maybe see a little bit over here where, yeah, you get a stray hair poking out or whatever. But that won't fix the Seth wanting to touch it because it just feels cool. It feels interesting to me. In fact, it would probably, it being oiled and then me wanting to touch it would probably just make things worse, right? Okay, we still got 2 minutes here. I meant oiling will smoothen them, won't cause them to grow in weird ways if you touch them. Oh, sure. I don't know if I look all that much different. I really like the look of when I've just freshly shaved it. I just wish it was darker. But whatever. I'm a little surprised by how much has gone gray and how quickly it went gray, and my parents, like my dad and my grandfathers, did not gray that early. I think that I've had more stress in my life than I probably should. It's it's like, man, that's like some stress that really was not necessary. Like, yeah, because it's not like my life has been so hard or anything like that. Okay, here we go. Oh, sorry. One minute. I thought that was about to turn 8 o'clock. No, we still got a bit. Interesting that order at 05 half has still not been filled. Risk of a question. No, we're about to get sentiment numbers. Okay. Oh. Okay, so 1 year was Sportial Spot 6, which is in line, and 5 year was 3% above the previous reading of 2.9. And let's see here. Sentiment was 63 spot 5 versus 63 spot 5. So this number is mostly in line here. Okay. For a second there, I thought that it was outside of it, and I was about to go and hit it, but it is falling a little bit. It seems to me like there may be some sell flows out there waiting for the news to come through first, but I don't think that they're selling on the news. Well, maybe there's a little bit selling on the news, but I don't see a reason to sell based on that news. So Friday can be kind of rough, especially after, after all the events are over. Man, my ear really itches. Everything itches, guys. It's just the freaking, ugh. Allergies suck. I've heard that when there's an imbalance, it acts like support. I'm not sure how to answer that, because like imbalance could mean so many different things, and support and resistance could mean so many different things, But that's just why, like to me, expecting a certain price to do something, and unless I'm seeing something on the DOM, just doesn't make any sense. It's hard to know what to believe, right? Yeah, because there's no data, right? I mean, my general observation has been that retail traders often there is kind of something to what they're saying, but they don't actually understand it. Support is your gym training, bro. Resistance is the weight on your barbell and benching. Oh man, I am okay. So we are gonna be putting some gravel in our garden So yesterday I was like, well, it looks like we need a new wheelbarrow. I should get the new wheelbarrow and, you know, do a little bit of following the kids around on it and stuff so that when we get the rocks that, you know, I have, you know, I'm in a little bit conditioned for it. So I went and I got this wheelbarrow, and it's actually a cool wheelbarrow, and there's like a lot of nice things about it. But what I didn't realize is that the wheels on it are hard. So like if you hit a bump, it's just like goodish. It sucks so bad. So I think we're gonna take it back. We're gonna go take it back and get one with more of a tire. And then I'm gonna spend my weekend training for that, so that on Monday and Tuesday when the gravel comes, I can cart all of the gravel back to the back. It's gonna be rough. Well, we've had a little bit of downtrend since this, but not too much. There was a large transaction that happened in there. Like I'm looking at this and it really makes me want to try and buy at 347 again on the hopes that I'd get 5 maybe even. But then I think about it and I'm like, yeah, but it's Friday. Like, and it's already past 8 o'clock. So I don't think that a big trade like that really makes much sense. They never filled this order at 05 half either. Although I don't know if it makes sense. This one makes much sense anymore. We might be able to. I think we're probably still in a bit of a hole here that we should be able to get something. Oh, it got filled. There we go. Okay. They're gonna go through me here. Oh, maybe. Seems like there's a little bit of volume coming back and forth here now, though. But no, I'm still having trouble getting my fills. I don't think maybe 05 half is the wrong space to be doing this, because it was really hard to get 05 half filled. And now they're trading 05 half a lot, and it's hard to get filled at 05. It could be the trend may have flipped there. Well, I think I'll still let that one at 07 half go through. What the heck is this going on? Oh. Like, okay, so the story from Bloomberg is crypto has lost the battle against fiat currency. BIS chief Augustin Carsten says. And Edward Snowden responds, man couldn't even win the battle against the International House of Pancakes, and he's out here trying to eulogize his enemies. So it really bothers me that we continue to see all of these people like on Twitter engage in these like personal attacks against the people instead of making like actual arguments. Like Edward Snowden, perhaps you could provide some replies about like why cryptocurrency has not lost the battle against fiat. I digress. So now Nassim Taleb retweets this and says, from now on, let's evaluate financial arguments and riskiness of currencies by using a scale. The lightest theorist wins. So Snowden's financial theories will be considered vastly more rigorous than those of David Ricardo. So there we're talking about his weights, and because Edward Snowden is pretty light, well, listen, if that was the way that the world worked, I would be like the biggest. Watch the recession argument get pushed to next year now. I am genuinely concerned that that's what's going to happen, right? I don't know. So where we're at right now, here's where I kind of see this is like, okay, so the Federal Reserve is supposed to raise interest rates in May. And then it was widely anticipated, or at least what they have signaled, is that then they would, quote, pause, right? But now the economy appears to be doing pretty good. I mean, there was some weakness, but now those numbers are kind of coming back a little bit, right? And so now some people are saying that they might even have to raise in June, July. I forget when the next meeting is, but so if they have to raise 2 more times and then they pause. But then I'm starting to get into like they just have to continue raising and raising and raising. I mean, doesn't that still put them on track to have a recession in the second half of the year? I don't know, man. Well, one does kind of have to wonder how the market is able to be so resilient, right? I mean, it would especially be the case if the recession got pushed to next year. But I think that you can already kind of make the case that, hey, I guess the Federal Reserve did the right thing if they raised interest rates so fast and like we were able to handle it. You know what I mean? By the way, Spoo's still buying. I told you Jerome P is S tier. You're right, because we remember we had this whole conversation that like if they pull it off, then Jerome is S tier. Yeah, totally. And you know what? Like, I think there's still this other thing that we really do have to deal with, which is that the data is just not really very reliable right now. Like, we had some really bad looking numbers in March, for instance, but it seems to me like a lot of that is just like overreaction to the previous months, right? Is like 1 month will be like too bad, and then the next month is too good. And then when you add revisions on top of all that and everything, and then people are making decisions based off of that data, and you just get chaos. Right? But I do see still, and here's two problems. Is that the number one, tech is not the economy. The thing that's driving this upside right now is tech. Earnings were not as bad as anticipated. Okay. It's just tech. And when I look at everything else, we do see a slowdown in activity. So I think that it is still likely that we see a slowdown in the second half of the year, which certainly wouldn't say it's guaranteed. And a lot of the buying has been technical. Like we need to consider that right now you're going to see a lot of people are going to be feeling bullish just because the stock market had such a strong rally yesterday, and it doesn't really, its technical flows, it might not be reflective of the actual economy at all. And for all we know, we're going to have like a terrible tumble down next week. You know, I don't know what those flows are going to be like. It's going to be really interesting because we're going to be getting a lot of economic numbers, right? So it depends largely on what the economic numbers look like. But, you know, I really think that we need to keep those sorts of things in mind. It was all the April is strongest seasonality month since the 1300 bros. Well, I think that yesterday it was mostly just that the long only funds have been so bearish and have stayed out of the market. And then when Facebook earnings were good, they had no choice but to FOMO into tech. Like, and that's the other thing about it is that, like, I don't know why it doesn't feel like it right now. Like at the moment when I started this stream, I didn't feel like this, but at the moment, for some reason, I feel like, you know, like actually it might be right. Maybe the recession gets pushed off to next year. But I think that man, I think that it was those guys were FOMOing in at like the worst time. You know, like I think that that's like the worst time to come in and buy Facebook is like after the earnings were good and everything, right? So I'm gonna laugh if then all of the data next week comes in and is dismal, and you know. But you notice that has been a theme in this market. Is like there will be some sort of impulsive move. So like this is what happened to the treasuries on what was it Wednesday? Was it Tuesday or was it Wednesday when we had the FRC? I think it was Wednesday, right? Where First Republic Bank, there was a headline about First Republic Bank, and the treasuries reacted really strongly to it and bought up on it, and then that was the height of the day, and they sold it so hard after that, right? We're seeing that in the market a lot lately. And so I would not surprise me in the least bit that once these guys are all done buying, and I don't think that they're done buying, I think they buy today. But then next week it flips back around. That would be very much in line with the way that this market has been behaving, right? The counter to that, I think, would be that the sentiment is so bad that as long as things don't flip back down around, that something bad happens or the action flips back down around, there's probably still plenty of buying fuel out there for all this. So well, now would be a good time to pop over to Zero Hedge and see what they think about some of these numbers that we've gotten this morning. Oh, and that was pretty good. Oh, fill me. After U.S. and German GDP gravely disappointed and inflation measures on both sides of the pond remain far more elevated than hoped for, this morning's print of the Fed's favorite inflation indicator will likely drive today's early action. Will likely drive today's early action among algos. Core PCE was expected to be flat, and it was, but February was revised up to 4.7. The headline PCE printed hotter than expected at 4.2% year over year. Even more focused is the Fed's view on securities inflation ex shelter, and the PCE equivalent shows that it is very much stuck at high levels. However, while acyclical core inflation slipped, cyclical core inflation continued to march higher, which is a greater problem for the Fed. Cyclical core PCE inflation, which tracks inflationary pressures that are linked to the current economic cycle, is at its highest on record going back to 1985. Americans' personal income rose spot 3%, and spending was unchanged. On a year-over-year basis, spending growth slowed to 6%, but at slowest since February 2021. There's a possible silver lining in that private workers' wage growth slipped to 7.4% in March from 7.6% in February. However, government workers' wage growth accelerated to 5.1% in March versus 5% in February. Spoiling that party, quite frankly, is the employment cost index rose 1.2% quarter over quarter, hotter than the 1.1% expected. Stagflation fears are building, and then they quote Nick Timmeros, as we pointed out earlier, the ECI component of greatest relevance to the Fed, wages and salaries for private sector workers, excluding incentive paid occupations, showed no meaningful deceleration in quarter one. On a real inflation adjusted basis, real spending was flat month over month. As a result of all that, the savings rate in March rose 5.1%. Its highest since January 2022. Simply put, this inflation data is not enough to provide any support for the Fed. In other words, their takeaway is that the PCE was slightly hot and suggests further interest rate increases from the Federal Reserve this summer, possibly. Because that's really where the market is kind of, the question is kind of starting to come down to. Well, now that we're back down here, how does 465 still feel? Well, it's even worse because we only have 40 minutes left. So I don't think that even if I really wanted to take a trade, it would be hard for me to justify doing it now. But I do feel a little bit more confident in the possibility of a downturn. In particular, I can still see that all of the flows in the 10-year especially, but in the 5-year as well, mostly tilted to the downside. And while there was a recent amount of buying in the 30-year, the 30-year slipped back down from 22.15 very, very quickly. And we did get our fill down here. And let's see, I got my contract out. So, hey, that worked out pretty good. I think I can try and hold this in the sim count. Okay. University of Michigan inflation expectations soared in April, sentiment inched higher than us. Okay. The busy end of the week for macro appears to be settling the narrative that we are facing stagflationary pressures as growth slows, but inflation signals remain far stickier than expected. This morning's final University of Michigan report confirms the flash inflation expectations have jumped dramatically, with long-term inflation expectations actually increasing intermonth to a positive 3%. Headline sentiment ticked higher month over month. Net change in confidence in commercial banks unsurprisingly plummeted since last fall, a consequence of the recent well-publicized failures of SVB and other banks. Note, though, that the survey grouped all commercial banks together and did not distinguish between large and medium-sized regional institutions. My nose is just so bad. The allergies are just killing me today, man. University of Michigan notes that despite the increasingly negative news on business conditions heard by consumers, their short and long-run economic outlook improved modestly from last month. Notably, sentiment declined most for the richest respondents. Is that the problem? Is that why Akshay is feeling so positive on the economy? He's just too rich. I'm just joking. He didn't sound that positive on the economy. But finally, we note that the market is now fully pricing in the 25 basis point hike next week by the Fed, and the blackout window means no Fed speak to push back against exuberant narratives. But bear in mind the clarity that Jay Powell offered fake Zelensky in the revealed clip yesterday. While dated, it would appear his views are far more hawkish than the market expects going forward. That feels so ominous to me. Well, what else do we got for the next 40 minutes? I'm looking at this. I don't know why I feel. I think it's because I had a trade yesterday and that trade felt so good. And sometimes when you have that, you want to feel it again. And it's like, I think this is an ADHD problem. Is like when you get the chemical, like the body craves it so much because it's not normal for you to get it. You know what I mean? I feel a strong desire to enter a position at the moment, but I really, based on the current market conditions, cannot justify it. I definitely am seeing downside flows to justify seeing a market order. But where I'm saying that I don't think that the conditions justify it is, number one, I'm not too hot on getting 347 as a price. And two, I'm not so hot on that we're on a Friday, all of the news has already come out, etc., etc. Oh, geez. So there's the E-mini just running again. Well, one thing that could continue to push us down and continue to create those selling flows could be the bullishness that you're seeing in equities as well. You know, in order for the market to get bearish, they really have to overdo it on the bullish sentiment first, right? I guess we'll see. You know what I should be checking, because I've been watching Intel and I haven't looked at that. Let's look at a couple of stocks, shall we? Trading View. If you need a view, try Trading View. Okay, well, here's Freddie. Or sorry, not every time I see FRC, I think Freddie, but it's First Republic Bank. First Republic Bank. Well, it's been sideways since earlier in the week when we were seeing those downsides, but a little bit of downside action this morning. Meanwhile, JP Morgan looking pretty good over here. Oh no, I forgot to turn on. I need to stop doing that. Have you tried Of course. Did you like only recently try them or something? Now, the first time I saw one in my area, I'm like, what's that? Well, we're going to have to try one. And then I tried one and I was like, well, this is too much. They're evil good. They are. I don't think that it's good for you to eat more than one. Like, oh, you're right, because you come from Portland. Oh man, did you know that there's like a huge lawsuit between them and the other cookie place around here? I know it was a funny thing back in, let's see, around what time was this? I'm gonna say 2015 or so. I was like, what would be a good business idea? You know what we should do is we should make it like it kind of try and make the Mormon equivalent of a bar sort of a thing. Because it seems like that's missing in our modern day. Because the Mormons have always been like, you dance and stuff like that. They've been big dancers. We were known as places having like the Great Salt Air was always known as one of the greatest dance floors in the world. And we've kind of lost that in our culture more recently. And so I was like, well, what if you just did mixed drinks and you could like have really fancy mixed drinks, like kind of like the way that they do with cocktails, I guess my idea was a little bit different, but then they got the, what do we call it? Oh my gosh, I can't even remember what the place is called. Oh, really? The owner is in your ward? Really? Wow. Oh man. So see, you guys that don't live in Utah, you don't even understand, okay? Like some of these places, like it's just like flavored soda or like cookies, and like the lines will go around the block. It's ridiculous. Fizz isn't the flavored drink place Fizz? Oh my gosh, because the problem with Fizz is that they always put it in this super tiny shack with that was never intended to have like a long drive-through line. It's ridiculous. It's ridiculous, dude. And here's another thing. I mean, is this a Utah thing, or is it just like is this a thing in elsewhere? Because like, if you want to go to Chick-fil-A, oh my gosh, the pandemic was so good for Chick-fil-A. Oh my gosh. Like especially that March, man, the line for Chick-fil-A was so ridiculous. And then the other one is In-N-Out. Oh, the line for In-N-Out is always so long. Didn't they say that sugar has a similar effect on the brain as cocaine? maybe similar, but not to the same degree. So is what you're saying is that maybe my trading would be better if I ate more of these cookies because I would get my high from the cookies rather than from having winning trades? I think I see where you're going with that. Yeah. Right. I have been eating too much ice cream lately. I have been eating a lot of ice cream lately. Oh, no. Wait, don't go back like that. Okay, wait. Because I got to tick up, I'm going to leave a contract there at 05. Because that ticked back up a little bit faster than I anticipated. And they started, they put like the stacks there and everything. That says to me that the market maker is starting to play games. So now I am definitely like not going to take a live trade, right? Because if the market maker is starting to take control now, then there's definitely not going to be very good opportunities for us, right? No, so on the point of like what gives you your high, I think it's just a part of getting older, but I remember times when people would give that to me. There'd people that I just really, really wanted to be around or whatever. And that started to get stressful for me at one point because you're usually too much for people. And so I've like really actively avoided that, and I haven't had that for a long time. But that seems to be like the best, easiest, most persistent source of that kind of chemical, you know, as other people. And I kind of cut that off. I was like, no, let's keep things boring. You know? Man, I don't know if that order at 05 is gonna get filled. They're coming back up. So I just want to point out, market maker position is here, and it seems like there was a little bit of a flush there. Like, my model is showing a relatively significant change there for some reason. So I'm trying to figure out what's going on here. The issue, though, is that could be informed trading. Like, the amount of volume that we saw there from 05 to 07, and on the, you know, like, look, they took a fair amount of offers out of there. So there aren't enough cookies in the world to make you feel better than a winning trade. Maybe you're right. I tell you what, when I have a bad day, it's super hard to bounce back, man. I guess I need to go more into the science of performance, you know, so that when you have a loser, it doesn't affect you. Because I feel like that having a loser affects me a lot, and having a winner affects me a lot more than most people. Yeah, I don't know, Raymond. You need to have one of these cookies, though. You know what, though? They do have them. They have similar places in New York now. I don't know about Portland, but they have similar places in New York now. And actually, there are recipes floating around online. So to get the cookies. And you want to know what the secret is, by the way? I know the secret. The secret is lots of butter. Okay, like when Trading Bunny said earlier that like one cookie has 600 calories in it, she was not joking. Okay, they really do have like 600 calories. You really like when you get them, when the kids get one, because you don't just get one, you get a box of like 6 cookies, and one cookie is like this big. Okay, I'll eat like a quarter to a half of one and then be done. Which is really makes it kind of ridiculous that you have to buy a whole box. But there's this other place, I forget what it's called. I think it's like Bramberry or something like that, but it's a donut place. And it's only donuts. And each day they have a different type of filled donut, but if you can go on there on the day that they have apple filled donut, that's really good. I would really like one of those again. Oh no, you know what we have is the carts. So in my city they have carts on Friday. What are the carts today? I'm not really hungry, but oh man, I think I should just scratch this. This is like not looking good. Yeah. Well, that sucks, but you know what? I did put an order out there. It just didn't get filled. That is enough volume that we do really have to consider. Oh, you know what? Something is going on, guys. Something's definitely good, because look at FRC. Wow. Well, look, there was like this, and then a huge, it was halted, and then huge drop. What are we missing? Okay. FDIC receivership seen as most likely scenario for First Republic CNBC reports. Wow, they dropped 6.8%. That's why they're buying the treasuries out there. You don't want to fight that. No, no, no. Ooh, do you think we could get a stop run at the highs before we end today? I'm not gonna. So the more that I mess with this on sim contracts, the more that I'm gonna be over here on like in the micros and being like, let's sell this. Oh no, selling 3, 4, 4, 5 seems so crazy to me. I think not. But let's keep Freddy up here and let's watch it, because if the treasuries get up there to those highs, we could see some real fireworks, right? Okay, FDIC talking to a number of banks regarding a solution for the fate of First Republic Bank that would include receivership, sources tell David Faber. I'm gonna watch the video here. I can't show it to you guys because YouTube will probably flag it, but okay. Interesting. Okay, so what's going on is David Faber is talking to the banks, and the banks are basically telling him that the FDIC has been asking them for bits. So and then they asked the FDIC, and the FDIC said, basically, they didn't like outright confirm it, but they basically said that, you know, we're working on solutions and so forth, and that could include it. So what it sounds like they're saying is that they're looking for somebody to buy First Republic Bank and absorb it, and they're asking for bits. So that's the end of First Republic, possibly, is what it's looking like. They've gotten man, they've been halted again. The dollar is plunging here as this is all happening too, by the way. And we're also seeing it affect the equity markets. So I think, you know, if I was saying I think that we close the day at above 4150, I don't know if this First Republic news will really have a super strong impact on the equity markets or not. But I feel like for me, if I had been trading that I would be taking profits. You caught 15 points. That's still really good, right? But I continued to be really surprised by how strongly the treasury market reacts when headlines about First Republic come in. I'm still, it's about a 5-minute video here. So David Faber he's saying they're trying to privatize the losses. They're saying somebody else will have to buy it, and they'll take on the temporary loss. And so it would want to be a big bank that has the ability to absorb it, right? If nobody is willing to buy it, then that's when the FDIC would have to step in and do something, and the FDIC would be the one that takes the loss. Okay. And the way that he's talking is he's saying that it's like a fluid situation and that there is still opportunity for that to change, but that the most likely scenario is that First Republic will go to FDIC receivership. In other words, nobody wants to buy them, and it has to go to the FDIC. Is what it sounds like they're saying here. Now I'm starting to see a lot more people on Twitter start to pick up on this. Treasuries are reverting back down. Well, I tell you what, if I had taken a trade when I was like, I really wanted to take a trade, I would have lost potentially 30, 40 bucks. Like, it would have been really bad. So I'm really, really grateful that I have learned to not mess around with it unless I really have a strong edge, right? And I definitely did not, it's a Friday, so that reluctance to do anything on a Friday really paid off for me this time, didn't it? This is a good song. I like stuff with the bass in it, man. Bass is the most fun part of music production. Let's reset things. It looks like that for now the market is kind of chilling out a little bit. See if Zero Hedge has a story about it. Oh yeah, I forgot. I was gonna go and see what kind of food we get tonight. Well, they do got a barbecue place, but it's a different barbecue. There's this one barbecue place here in Utah. It's a cart. It's called Black Sabbath Barbecue. That's what it is. And it's like your classic Texas barbecue. And everything that you get from them is like, I shouldn't be eating this, should I? But it's so good. But that's not what they got here today. Man, realizing that I had that one up and had forgotten about it is like, whoa. Seth, you're so far behind. I haven't been doing very good. Actually, I'm looking at my little board here. So, Seth, you need to be more organized. Here's my board. I finished that task. I'm going to put that over there. This task is the priority. And I need to finish writing a video. I should make on Monday. I'm gonna do it on Monday. I'm going to go and look at my other YouTube channel for politics and make some shorts about politics. Monday. Oh, next week is gonna be like a crazy week for the markets. What else do we have on the docket besides, the Fed meeting and the, of course, non-farms? Monday we get ISM manufacturing PMI. Tuesday is JOLTS. Why is JOLTS on Tuesday? Isn't JOLTS usually on one? Oh, maybe not. Okay, and then you get all the other ones. Services PMI. Oh my gosh. Next week is going to be so busy. is going to be so crazy busy, man. Ooh, and we get Treasury current report too. That one is kind of like a tentative one that gets released later in the day though. But that's next Friday. Next week is going to be really busy for the markets. So again, I think that a lot of the buying that we've seen here this week has been technical buying. Of course, we keep seeing this like First Republic Bank headlines coming in and kind of like scaring the market around, but those are like very short-lived. I think that the news and information that we get next week could very easily wash out anything that we're seeing today. I mean, it could extend it, it could retrace it, but next week is going to be an important week for data, at least. At the very least for data. Oh, here we go. Here's the zero hedge story on the First Republic. Yen plummets after Bank of Japan crushes hawks. Will take up to 1.5 years to review current policy. You know, and the treasuries have not been too correlated to the Japanese yen today, but probably when we were seeing the selling earlier in the day that it was from the yen. So we do kind of have some conflicting flows in the treasuries. I'm betting that it's like hawks are making things, or sorry, Bank of Japan is making things dovish, but then the end of month flows and First Republic Bank things are bullish. Or our buying flows. And we'll read about that first. In a slap to the face of all those who naively expected that the Bank of Japan would finally unveil some hawkish pivot, ignoring the fact that it owns more than 100% of Japan's GDP in GAGBs and has a DVO1 in the tens of billions, any market recoil to a hawkish Bank of Japan pivot would instantly implode the world's second biggest bond market. Overnight, the Bank of Japan scrapped a key part of its forward guidance on interest rates in Kazuo Ueda's first board meeting as governor, signaling the first steps towards unwinding its ultra-loose monetary policy, an unwind which won't come for over a year, however, if ever. And by then, Japan will be back in deflation with deeply negative rates anyways, so nobody will remember any of this, and the Bank of Japan will be back on its merry debt monetization course. Gosh. Dude, that was, okay. Tyler Durden, whoever he is, was definitely the guy that wrote that one. Okay. Which is not to say that the Bank of Japan did nothing with Japan's inflation scorching and sticky above 3%. Kuroda's successor Ueda had to do something, which is why the Bank of Japan had announced a plan to review its past monetary policy moves, laying the groundwork to gradually phase out his predecessor's massive stimulus program. But not yet. For now, the Bank of Japan kept its ultra-low interest rates on Friday and maintained a commitment to patiently keep policy accommodative while saying it would spend 1 to 1.5 years on the review, which will look into various unconventional monetary steps taken over the past 25 years during Japan's battle with deflation and low inflation, Ueda said. The idea was to use lessons learned from the review in guiding policy during his 5-year term, Ueda said, though he added that the Bank of Japan could always change policy before conducting the review. At the same time, the central bank removed a pledge from its guidance for interest rates to stay at current or lower levels in a move that yen bulls see giving the Bank of Japan more leeway for a future policy tweak. Ueda's debt policy meeting marked a cautious start for the 71-year-old governor who took office this month, leaving room for him to make future changes, but sending a clear signal to markets that he would be in no rush to do so. In a news conference, the new chief said the broad-based review won't be tied to near-term policy shifts and stressed the need to wait for more evidence to conclude inflation would sustainably achieve the Bank of Japan's 2% target. While trend inflation is gradually heightening, it will take some time to achieve our inflation target, Ueda said after the Bank of Japan's widely expected decision to make no changes to its yield curve control policy. Unlike in the US, where a wage price spiral terrifies the central bank, in Japan, the Bank of Japan would give a kidney if it could get a burst of sustained wage inflation. The risk of missing our price target with premature monetary tightening is bigger than the risk of experiencing inflation exceeding at 2% due to a delayed tightening. The cost of waiting for trend inflation to heighten is low, he said, in a 180-degree reversal from what Western central bankers have been saying. The yen tumbled and Japanese bonds and stocks rallied after Ueda crushed hopes for an early hawkish pivot and would take his time to withdraw the stimulus of his dovish predecessor, Haruhiko Kuroda, who retired this month after a decade at the helm. Man, this is a long story. I'm going to read the whole thing, though. We're doing it. The fact that the Bank of Japan left a reference to further easing as needed confirmed its stance to continue monetary easing, said Naomi Mugarama, senior market economist at Mitsubishi UFJ Morgan Stanley Securities. Some analysts saw the Bank of Japan getting some breathing space with the 10-year yield having fallen below its 0.5% cap, thanks in part to a decline in U.S. Treasury yields on expectations the Federal Reserve will soon pause its interest rate hike cycle. The Fed and the U.S. economy are bailing them out from doing something right away, buying them some time. It doesn't mean we get no change to yield curve control for the next 1 to 1.5 years, said Jim Levis, the CEO of Public Fixed Income at M&G in Tokyo. There is uncertainty on how the Bank of Japan may end ultra-easy policy as it weighs emerging signs of wage growth against lingering headwinds from slowing global growth. In fresh quarterly projections released in a report issued on Friday, the board revised up its consumer inflation to 1.8% in the current year ending in March 2024 and 2% in the following year. Under previous projections made in January, the Bank of Japan in fact expected inflation to hit 1.6% in this year and 1.8% in fiscal 2024. But the Bank of Japan projected inflation to slow to 1.6% in fiscal 2025 and said risks to that price outlook were skewed to the downside, highlighting a lack of conviction among central bank policymakers on the durability of price growth. Our forecasts show that we're getting quite close to achieving our price target, but we're not quite confident our longer-term inflation forecast, Ueda said. The growing side effects of yield curve control, such as market distortions caused by the Bank of Japan's huge bond buying and the strain on bank profits from ultra-low interest rates, also complicate the timing of an exit, analysts say. Ueda said the Bank of Japan must be vigilant to such side effects even as it keeps monetary policy ultra-loose. It's true we're seeing side effects here and there. We need to closely scrutinize these developments, he said. We must avoid getting the balance of benefits and costs wrong, so we'll be vigilant and disclose information as much as possible. Okay. Well, First Republic Bank is going for new lows. Whew. I really wanted to see the treasuries break out. It was so close, but it didn't do it. If they breach those highs, it's going to be like game on, man. Like there's going to be some stops there. Good grief. Although it probably not as many stops as, oh no, they're probably still on there. Oh dude, so the COT report for this week and next week are going to be kind of interesting. I would expect that the shorts this week will have decreased, right? For the last 2 weeks probably will have decreased, but the question is how much? I bet you there's still plenty of fuel that if they break 12 half, that we could see like some craziness, right? Okay. First Republic shares crashed to record lows as deal hope fades. First Republic shares are halted for volatility, having collapsed 25% back to record lows as hopes of a private deal fade. The question now is simple. Will they make it to the close without the FDIC stepping in? Okay. So now we're saying it could be any minute now that the FDIC steps in, right? Which I hear. Are you still around, Akshay? Do you know anything? Have you heard any stories about the FDIC coming in and taking over a bank? Because my understanding is that it's a dramatic happening. That it's like the same as when the FBI like comes and raids your firm for evidence and stuff. Like they come in and they just, it's like they've got this whole team and they just come in and take control. I just got into say trading. I'm not too sure what I'm doing. I came for the info, but you seem cool, so I had to say for the vibes. Oh, well, that's you very good. I'm not always the best with the vibes, but I think we've had good vibes today, haven't we? And I wish I was better at that and I was able to keep the vibes good all the time. So I'll work on that. You let me know how I'm doing. I guess I'm in good mood because I had a really good winner yesterday, right? And then I didn't do anything stupid today to lose it, so... I certainly could have screwed myself over today because there's been a lot of choppiness here, hasn't there? Been a lot of choppiness, hasn't there? I don't know though, man. This whole First Republic thing is kind of killing the vibes, don't you think? Look at that chart, man. Like, look, First Republic was not looking good before, but look at that now. Okay, earlier in the week when it was doing this, right? We're like, oh, that's awful. Look at that. Look at this. It's a huge gap off of a halt and everything. Like, that's bad. Yeah. And I mean, I was saying here on Wednesday, like, well, I mean, shouldn't FRC be worth 0 now? I don't know. It looks like they're going that way. I don't know if you'd be able. You probably do. If you had bought puts over here, I doubt you'd actually be making money on the drop here, but I could be wrong. We should have gone in and looked. Should have gone and looked. Well, I would like to stay here and chat. There's still a possibility that we break these highs here, but I gotta go. It's time for me to go. Do you think it has a chance? I don't think I should try and make any predictions about if it will or not, because the reality is that it is a very uncertain situation, and what I've learned, you know what, I had to post about this. It's too late for me to go into this, but you know, sometimes when these really crazy things happen and traders will go, oh, I missed that. Like, how do you catch that? We need to, you know, what do I got to do to get that and everything? Sometimes it's just luck. And, you know, if you try and get involved in them afterwards, you can get stuck in all sorts of nasty, like, chop and stuff. So I would not be the one coming in there and like trying to buy it in the hopes that First Republic doesn't get shut down today, right? That's one where it's like, if it didn't happen today and then like a month had gone by and you hadn't heard anything and everybody forgot about it, and then maybe you buy it, you know what I mean? But do not, I'm telling you, man, do not try to catch the falling knife when it is the primary focus in the market. Okay, the retail traders getting involved in that stock that is like the primary focus, especially the ones trying to buy it, get crushed. They just came out of a halt and immediately halted again. They should just delist it, man. NASDAQ should just come out and say it's halted for the rest of the day. And then next time it comes out, it's delisted or whatever. Don't let more stupid people come in and try and gamble on this thing. It can seem hard to predict. I appreciate the perspective. Yeah. And I mean, it's not just that it's like you don't have any information to know where it's going or anything. It's that the flows that are going to be coming into it are going to be so strong and turbulent that it's like too hard to hold risk. And it's too risky in most of these cases for retail traders, especially if you're trying to go from the buy side. It never works out well when you try and catch the falling knife when people are still talking about it. You don't want to. When a stock is the market's punching bag, you don't want to be in that. Wait until everybody forgets about it. I gotta go. I will see you guys Monday. It's gonna be a big week, so I'll see you guys then. In the meantime, stay excellent.